Okay, welcome, guys. It is now Tuesday evening, October the 7th, in preparation for Wednesday, October the 8th, trading day. We're finishing up Roy Longstreet's viewpoints of a commodity trader. So this chapter here is on courage. We're going to jump in. I have a couple things I want to go over here, starting with the 65,000 tick chart, but we'll get to that in just a moment. All right, to trade successfully, one needs two things: knowledge and courage. The knowledge that you can learn or buy. Courage cannot be learned or bought. You either have it or you don't, but you cannot succeed without it. Money is the name of the game of commodity trading. When the opportunity for large profits is present, you must strike while the iron is hot. At such times, you must make many times as much as you can lose on each of your loss trades. If you make a little money on the big moves that occur only rarely, you might as well quit. You are likely to experience a series of lost trades, so you must make it big when the opportunity presents itself. Courage is of two kinds in commodity trading. One kind is when you back your knowledge when things are going your way. The other kind is when you have the courage to quit when things are going against you. The great danger in I'm sorry, the way this is all typed out, just bear with me. The great danger is in confusing courage with bravery. The market is no place for heroics. That is for another battlefield. In the marketplace, it often takes more courage to live than it does to die. The greatest courage is the one that lets you graciously admit that you are wrong when you no longer have good reason to trade. The courage associated with the hero, I can take it, often destroys the courage that is needed to be successful in trading, basically. I have witnessed cases where temporarily successful traders have lost their touch because they lost their courage. They exceed their stress points uh, too many times. They became uncertain of their judgments. They sell when they should buy. They reduce when they should add. It is a wise trader who knows his own stress point. All right. Next chapter here is change. In commodity trading, it is the only, I'm sorry, in commodity trading, it is the only thing certain. Somewhere a change is occurring that can make you rich. Most of us are normal in that we expect the change to occur outside of ourselves. A few are aware that the greatest change can be in ourselves. One of the great discoveries of our age is that man can change himself, that each of us becomes what he thinks about. A number of years ago, an executive in the meatpacking industry remarked, "The thing that's wrong with the railroads is that they think and act like railroad men." It was my pleasure to have another executive in the meatpacking industry call on me recently and hear him say, "The thing that's wrong with the meatpacking industry is that we have not adjusted to change. When we think and act too much like meatpacking men." One need only to look about him to see the simple truth that it is easier to change yourself than to change the market, or oneself than to change the market. If we will pay the price by adjusting to the market, we can have what we want. Our greatest success will be the greatest victory, which is the victory over ourselves. We can hope to profit by changing the outer world. We can be more certain by change in the inner world. All can face the future unafraid. All right, exotic markets. All market action is man-made. Markets in which speculative interests are dominant seem to be more mercurial in price movements. My experience leads me to place the following in the classification of exotic markets: potatoes, copper, cocoa, bellies, cattle, and eggs. There are probably others too. These exotic markets, of course, offer opportunities for profits just as the more stable ones do. However, it does require a different technique to do so. One who is successful in wheat, corn, and soybeans may not be in potatoes, bellies, and eggs, or vice versa. It would be misleading to say that some commodities are always exotic in nature. Given the right conditions, any market may become exotic, whether markets tend to be or so. Where markets tend to be so. All right, what's next? In this world, nobody is spared sorrow, tragedy, and the grief associated with his mistakes. The question is what to do about them. My former boss, the founder of Ralston Purina Company, always had one answer. What's next? Nothing can mess up a man's life and increase complications like mistakes. It can be a steady and persistent drain on his energy, rob him of his efficiency, clog his mental and spiritual machinery, and cut down his drive to zero. What does a man do with his mistakes? The failures, the defeats of the past. Like a hideous infection, they pollute all his ambitions, his dreams, his determinations for the future. Memory of mistakes drains his vitality, leaving him weak and whipped. True greatness comes this way. Until a man comes to the end of himself, until he reaches his extremity, becomes aware of his limitations, until he weeps over his own mistakes. He may be cocky, but never great. Men like Edison, Pasteur, and Henry Ford survived hundreds of mistakes, failures, contempt, and loneliness to win unheard of victories. Faith teaches us it is always too soon to quit. Despair is never justified because despair of self is really to despair of God. We can learn from mistakes, but only if we persevere. All right, that's good. I think the last thing here is a prayer, and I'm going to try and actually I may zoom in on this, see if I can get this on my page here. All right, Lord, slow me down, ease the pounding of my heart by quieting my mind. Help me to know the magical restoring power of sleep. Let me look upward into the oak branches and know that it grew solid, strong, and enduring because it grew slowly. Give me strength, courage, wisdom, vision, and a clear mind that I may carry to fulfillment the responsibilities placed upon me. Renew my energies that I may utilize to the fullest the talents bestowed upon me. When life has struck me a low blow, help me to remember that this too shall pass. In times of prosperity, remind me that the present is all that I have. Permit me to enjoy it and to find fulfillment. Permit me to persist in my pursuit of those inexorable laws, which, if too long ignored, will crush me, but which, if observed, can be the ever-willing tool to accomplish they will. Help me to understand that the real secret of happiness is to learn to live within my limits. In good times, let me befriend others, knowing that I will need their solace in many times of adversity. May I ever be mindful that not my will, but thy will be done. All right, so that's the end of Roy Longstreet's book there. I hope you guys enjoyed that. I know I sure have. The numerous times I've looked through that. We will start probably won't start another book until next week when I get back. So I'll be in the trading room tomorrow. But then we drive out on Thursday, and I won't be back in office until Tuesday on that. So all right, let's jump in here. On the 65,000 tick chart, I kind of went over this last night in the video. We were pushing up in here, and I said that hey, we were at the midline. If we opened up here in the midline, be careful. But we have this upper boundary and this lower boundary, and then this was a second lower boundary down here at the 44 zone. And again, that was based on prior resistance that had been found as resistance in that zone and prior supports. So we could see that we, opened up here this morning up in the 6,800 range, plummeted down to this in the 50 zone, 54 zone, and actually even came down here into the 46, 47 zone as lows. So that's now here's the 65,000 tick chart. I did want to point this out. You can see that in this run down here, we were making this a little bit of bullish divergences in both the fast line and slow line. So that being said, we'll jump into some of the other stuff. Jump into the other stuff here. I've got some 3-bar stuff to go over that may help also paint a better picture with that. But so that's on the 65,000 tick chart. On the daily, let's see. Where did that go? Hang on. Sorry, guys. There we go. Okay, on the daily, we had that 6 day run up. The last one we were hitting, multiple days, 9, 10, 14 days before we came down and did a 5 SMA buy. We've only done a 6-day above the 5 SMA, and then today was a close back below it. We'll see what tomorrow holds on that. However, you can see that this Thursday, Friday, Monday, Tuesday. So Thursday and Friday. Yeah, Thursday and Friday. No, Thursday, Friday, Monday. No, this is Tuesday, Monday, Friday, Thursday, Wednesday. Sorry, so that would be Wednesday. Wednesday, but no, Thursday's low. Thursday's low and Friday's high. That's where we're at. Sorry. Thursday's low, Friday high. Created a 3-bar that we stayed within yesterday. We were looking for a breakout of that 3-bar. We tipped above it here, just barely above it here on the ES, on that, and then came off that today. However, the integrity of this 3-bar is still intact, except for the fact that we poked above. Now, was that a false poke and now we're going to come down below it? Or was it, signs or foretelling of another move up, stronger move up, and to take out that high? Still to be determined. We will keep an eye on that. Also, I wanted to show this on the SPY. You kind of got that same thing going on here in the SPY, where Thursday, Friday, and then Monday was contained within there. Little poke up this morning, only to come back down. So that is in the SPY as well as the ES. All right. I did want to pull over the 30-minute charts here. All right. So let's take a look at this here. So like I said, as I said, we're kind of towards the bottom of that range. When we look at this price action today, if you were trading it or you look back at it, you can see that we left a pretty low developed area here. Hang on. Pretty low developed area up here that could be, turned back into, or this could be, so we could either turn up into here tomorrow and kind of chew up into that low developed area, or this could be a leg down with a couple legs of correction, and then have another move down for a second leg. That is a possibility. So we'll kind of keep an eye on that, how far we kind of play up into this area tomorrow, or if it looks like we're going to start breaking down, if this is just a potential bear flag here for that move down. So both things are worthy of keeping an eye on. However, when we came down here and spiked down into here, we made a pretty good push on that fast LDR. Obviously, we're trending up here because the price is trending up. So we'll keep an eye on the 30-minute, 60-minute type timeframes on that. Let's go to this. Yeah, I think it pretty much shows the same. Yeah, pretty much shows the same type thing. This on the 60, we had this kind of channel here, broke out of that channel. It'd be interesting to see if we move back up into that the lower part of these cut touches here, move up into there, which would also be eating into this low developed area, and then attempt a second leg down. So those are things that I'm going to be watching for tomorrow to see if that were to play out. Okay, the 30 to 60s, the internals. Move this back over here. Let's go to the internals. Okay, so yeah, you can see the VIX did move up here, supporting that move down in the pricing today. So that was good to see that VIX move up to support today's move instead of VIX continuing to move up and prices continuing to move up. So it's kind of nice to see that over the last couple days here. Basically from the close on 10/1, 2, 3, 4, 5 days into this, and we're basically at the same price point. So we're building some energy, we're building some steam, either for a good thrust up or a pullback, for now. Keep in mind, we have been in this extended just bracketing up mode here for quite a while. So let's see. Okay, that's it as far as that stuff goes. I did want to pull over one more thing here, and so if you'll bear with me. Oh no, it's on that. This is going to get a little busy here, so just bear with me. So I have here the play of the day was the shorting up here around the 6,800. We'd touched that a couple times. Looked like we were losing a little bit of momentum, a little bit of strength there. Set up for a good short play. We came down, went sideways bracketing here. Then we broke. So here's we had this extreme volume coming in on the breakdown. So we had this sideways bracketing and then this breakdown here on a 2-minute. So this first one here, you can see I have marked with the starting of the blue boxes here. Then the next one, as we started breaking, that's when we went up and met and had the same volume basically as opening candle volume. So that was extreme. Then the very next one, we went up and went quite a bit more. So that breakdown out of this sideways consolidation was, even though, yes, I did do some buying in here and got fortunate on some of that stuff. But in hindsight, looking at this type of a setup and type of price action here, that breakdown out of there was supported with volume. So we came down here, this play of the day here. So then we finally start having this huge volume divergences. We're back down to the first 6-minute, under the 6-minute volume, staying pretty consistent there. Finally, we start seeing the slow and fast line divergences as we come back down here and test this again around the 1220, 1220 to 1225, 24 mark. We start seeing that slow divergences. We start seeing those tick divergences. Counter to this play, the VIX was still pushing up. We were hitting new highs on that VIX, right in here. Also counter to the play, the breadth was still pushing down. We were hitting down here close to the negative. I don't know, important to get that, but on the breadth, we were down close to the negative thousands. And that didn't matter. So when we're seeing this kind of play here, this is one of the things I'm charting in here. Similar, but never the same, never repeated. I did have this 67.58 as a prior extreme tick zone. And you see that we met that first support right in that area, went down under it, came up, a little bit of resistance, came back down, but failed to push down. Then we started moving back up. So this, however you play that, it's up to you guys to develop your own, set up your own plays. But I just want to point this out, the first primary play of the day was that failure at the top of that box that I went over yesterday in last night's video. Push down, gap fills, capitulatory volume would be a good place to take your profits around that prior day's low. So good place to take your profits there. We started getting this capitulatory volume here, higher than the opening candle. Then it it oozed off a little bit more here. But as volume tapered off, we started getting those divergences. That's where to start looking for those plays back up into this 58 to 60 zone. And that's kind of what it did. We went up to 66 or 66, 66.50, I think, right in here, which is that prior day low. Met resistance on that, came up here. So this is overnight price action. We'll see how that unfolds overnight. But sorry, I know that's a little bit busy, especially when it's crunched up on the horizontal screen versus the vertical screen. But all right, I'm done here. Thank you guys for listening. Trade safe. Happy trading tomorrow. Let's continue to help each other out where we can. All right, talk soon.